Welcome everybody to the Sunday live stream, and I invited my friend and co-host back, Jerry Hall. Jerry, welcome back to the show.
Hey, Rob, and hello. Happy Sunday to everybody.
Happy Sunday. So today, like we want to do for pretty much every Sunday moving forward, is I want to take a look at some sell indicators. Is this the right time to, and this will allude to the thumbnail and the title, do you want to sell, do you want to buy, or you just want to do nothing? Because those are the three options for you. And there's nothing wrong with any of those, because it's whatever you decide is best for you. Don't let anybody tell you where you should put your money or do with your money or do with your crypto. So to that end, we're going to take a look at just a couple of things moving forward. So we actually came up with this idea after we've done a couple of watch along videos where I talk about when I'm going to sell, 50 to 80% of all my crypto. And there's a link in the description. It's under the crypto critical videos, and that is one of them. Another one is called stress-free profits, or the half and half method. So check those out. And I think some people right now are probably thinking to themselves, boy, I wish I would have done that. Wish I would have taken the profits, but I just could not sell a little bit. And that's okay. That's fine. Because some people are just here to hodl forever and give it to their kids, grandkids, make generational wealth. Again, my goals are not your goals, and everybody's in between. So what we've tried to do is the indicators that I talked about is we're going to talk about NUPL, MVRBZ score. We're going to talk about dynamic DCAing. Then we're just going to go into a little bit more of like what that's all about. But before we do that, Jerry, we were talking beforehand, and you said a pretty good comment, which I brushed over. But you said, these are the most favorable conditions we've almost ever had. And here we are right now, as far as price, not just looking at price action, just looking at price action. So what's your thoughts on this anyhow, before we move forward?
So let's be super, super clear. Price is a reflection of the market at any given time, right?
Sure. Yeah.
But price does not always reflect the environment that we're in. And I think that's really true with crypto today, specifically Bitcoin, in that we've never had a more favorable Bitcoin environment for entities beyond the individual. So companies, corporations, and even nation states have never had it as good as we have it today. With the accounting, especially in the United States, right? With the FASB accounting rules, with the clearance for banks to start their custody programs, which you'll see starting to come online this year, rolling into next year. You're going to start to see once the banks have the custody rails in place. You're going to start seeing all kinds of financial products around it, which are basically loans and things like that, where you can put your crypto with Bank of America and take a loan based off of Prime plus X. I mean, they're going to commoditize and monetize their ability to manipulate and profit from this asset class. We've never been in a better time than right now. And I don't, you were saying a lot of people were bearish. I'm like, there's not a lot to be bearish around.
Yeah, there's not. I think there's a lot of uncertainty. We talk about that. We talk about tariff. We talk about what's going to happen in Ukraine. We talk about what Jerome Powell is going to finally do. And there's a lot of, and the markets, of course, don't like uncertainty. They want a clear path. They want to see massive money printing. They want to see the Federal Reserve take everything either on or off their balance sheet. And they just want to go forward. And I think that's part of it. But there was also one more thing we talked about that I want you to tell them, which I didn't know until you told me. Brazil. What's going on over there?
So in the background, prior to the big global news of Trump signing that executive order for the Bitcoin strategic reserve, that a lot of people think was much to do about nothing, but I would argue it has everything to do with everything. Never before has a sitting president signed an executive order stating that the country now has a policy of adopting and holding Bitcoin. That in it by itself is huge. But what I was talking to you about is what Brazil is doing with their strategic reserve around Bitcoin. And they actually have a national program where they are not only holding Bitcoin, they have a policy to start acquiring Bitcoin. And they, a lot of in their charter, right, the where they want to go, they want to be Latin America's financial hub, which they're already kind of, in a way. They're already the largest economy in Latin America. There's no reason why they couldn't be the innovative hub for finance for the LATAM region. This is interesting things, considering that once you start seeing the United States sign into law these elements, look at the domino effect. Hong Kong is already working on such an entity. Switzerland's working on an entity. Yeah. Germany is kicking themselves in the butt for at $50,000, and they've got stuff on the books. I'd encourage people who are thinking that the price is indicative of where we're going to just do a little extra reading. See, just type in the Google search countries adopting Bitcoin and start reading what laws are coming on the books for a lot of these countries, because it's super optimistic.
It's weird. It's like, it's super optimistic, but here we are. That's just pretty much how it goes. So again, like Jerry, you said it well. It's this time and space right now is just a reflection of uncertainty. And that's what the markets are telling us. So I still feel like, to me, I look at this and I'm like, you know what? I think I never have as much as I should have, as far as like the accumulation phase. I'm like, I should have, instead of putting $100 in, I should put $125 in today, or whatever it was. And I think maybe it just gives us more time. But the question then becomes, okay, Rob, that's all great. You and Jerry, talking about whatever, but let's get the hard facts. Are we going to be buying or selling or just doing nothing? The doing nothing is very easy, and that's an option for you. And actually it works out sometimes pretty well for people. But if you want to go down that road and see if it's a good time to sell or buy, well, let's take a look at a couple of things. First of all this stuff we're using on Ben's website. Links in the description. Some of it's free, some of it's paid, 10% off the first month. And the thing we're going to talk about as far as like the DCA strategies, that's straight up free. But if we take a look at this one, this is called the net unrealized profit and loss. And again, to get a more detailed breakdown of that, just watch that video, why and when I'm selling, links in the description. And really what we want to see is above 0.6. And we saw above that level 0.6 and in some good times, March of April 2021, Bitcoin's around 66,000. Then it dropped down to 0.3. Then it pushed itself back up to around November, yet again above 0.6. So probably a good time to buy a little, to sell a little. And then of course we go back in 2017, we were way above zero. We're at 0.755. Then it crashed down to 0.54. Wow, 0.3. And of course it just went to the toilet. And these are good times to actually accumulate. See these little points right here? What is this? -0.3. Over here in, this is March of 2020, -0.02. Over here in November 2022, where the last low was, we had a NUPL of -0.326. And now we're in the positive. I know people we forget about the fact that just a year ago, Bitcoin was like 46,000, but we're still not above 0.6. We're actually at 0.485. Actually, in December of 2024, we did go above 0.6. I know some people are saying that would have not been a bad time to sell when we were in like 108,000. So this is just one of those indicators to look at. And what's important of indicators is string them all together and make a reasonable choice for yourself. So for me, this obviously is not a great time to sell. We could go down even more. But for me personally, I think it's more of a time to potentially accumulate. Jerry, what's your thoughts?
I'm personally in an accumulation phase, but one of the things that I think is really interesting, especially when we start looking at analytical tools like this, which are really helpful. The one part, and it's to me the most important part, these tools do not take into account the individual. What do I mean by that?
Yeah.
So my tax situation could be completely different than your tax situation. For instance, I may have taken a monstrous loss in 2022, Therefore, I have a tremendous amount of loss to write off against gains this year. And it could be the deciding factor on whether or not today is a good time to sell or not, right? Based on my history. And so I think one of the things you're going to start seeing is as these incredible developers start building these cool trading AI bots that we can employ that also factor in our own personal histories. Like I'll be able to get a bot that'll work with Ben's site, that'll have my personal history in it as it pertains to my tax situation. Do I have gains that I need to concern myself with, or do I have losses that I can write off against gains? And it will factor in, I'll put those parameters in the bot and it'll say, hey, Jerry, today's a great day to sell. Yeah. Or today's a great day to buy.
Yeah. So what do you use again, Jerry? Tell us again.
Oh, I just use my mind, but the point is I think you're going to start seeing, I'm already in talks with developers who are building things like this. And I think that very soon it'll be something that's commercially available to the entire world.
Yeah, very nice. I'll take that. Okay, so that's just one indicator. And like we talked about, and Jerry just said, use your brain, piece it all together. Let's take a look at another one. This is another one that we talked about in the video, MVRV Z-score, which is market value to realized value. Again, this compares the market value in order to assess when the market is over or undervalued, just like everything else. It's a the Z part standard deviation pulled out the extremes in data between market value and realized value and accounts for diminishing returns. It's been a good tool to identify where market values move highly or lowly. So for me, I'm always taking a look at this. I'm like, okay, when I want to sell, I'm looking for somewhere around, again, 0.6. And for this one, we had a pretty good time here again. And you may notice something, that this actually topped the peak in February of 2021, which was it was an okay time. I think Bitcoin's around 45, 48,000, but it wasn't the top. It wasn't November of 67 or April when it was 64,000. And of course, these indicators are all different across the board. If you're taking a look at between Bitcoin, and of course, you can switch it to any asset in the top 20, essentially, of altcoins, Ethereum, Cardano, Chainlink, so on and so forth. So when I'm taking a look at this, yeah, it says Bitcoin. Where are we? Well, today, again, December looked like it was looking pretty good, above 3. I personally don't want to do much of anything until it's above 0.6. Or maybe as time goes on for diminishing returns, maybe 0.5. But right now, we're at 1.84. So I'm going to say that's a big fat no. And maybe a time to start accumulating like Jerry was just talking about. And then also, we always want to take a look at some of the risk levels. And today you can see that that altcoin or all the crypto assets, digital assets that have the highest risk right now is XRP. Go figure. But it did have a magnificent run from, sub 50 cents all the way up to $3.12. And now I think it's regressed back down to so they're here, $2.23. So not too bad. But Bitcoin itself, it's right where I want to be. The risk level is below 0.5. It's at 0.492. Jerry, we talked about this when you were on before, right? Risk levels and stuff like that?
Sure.
Yeah. So what I want to show you real quick is first of all, I'm missing one thing. Because you're like, well, Rob, how does that look as far as on the scale from the beginning of Bitcoin? Obviously, the longer you're in, the more you can actually pull more data in and get better results. I mean, take that with a grain of salt, but I'm going to hide all this stuff. And these levels, which I guess is kind of hard to see. Let me turn the lights on. Ugh, sorry, everybody. I got to have you see this. So between 0 and 0.1, the only time that's happened is in the very beginning when Bitcoin was $2. That was like 2011. Again, very difficult. 0.1 to 0.2. This is when it would be a pretty good time to start to accumulate. And this is back in the 2013s when Bitcoin topped out around $1,006. And then it crashed to between $394 all the way down to 220. Yeah, 176. And then in 2017 to 2018, it told you to pretty much accumulate at the $3,000 level, 3,500. It told you in 13th of March to accumulate at 3,800, and it told you to accumulate in July 2022 when we were at 19,000. So all in all, a pretty good bottom indicator. So where are we now? Well, I'm just going to turn on the 0.4 to 0.5. Not too bad. And if we come over here, where was it telling us this was? 54,000? I don't know if everybody will be okay with that. 57,000, 57, 57, 54, 58, 62. It's kind of high. And now, of course, it's a little bit higher, but it's telling us again, if you want to accumulate, this would be a pretty good time. And that would take me to the last point before we take a look at some real world examples. This is called dynamic DCAing, where you take a look at the risk levels and you either buy, sell, or do nothing. For me personally, between 0.001, that's an automatic buy. If that ever happens, I will sell my kidney because I don't need two, I only need one. And to stay off dialysis, you only need to have 50% function. I don't know if you guys knew that. So there we are. So then we say 0.2, you buy. On this one, I have it as no, 0.4 to 0.5, but take it as you were. I'm actually dollar cost averaging. But then between 0.5, 0.6, 0.6, 0.7, 0.7, 0.8, I don't do anything. I just sit on my hands. Then around here, start considering selling. So, Jerry, what's your thoughts on this one before we get to the real world examples?
Well, I think that I love the fact that you are looking at using some analytic tools, incorporating them into a strategic way to dollar cost average. I think that's brilliant. I remember when you first rolled out dynamic DCA, it had to be like 2 years ago or a year and 18, 19 months ago, because I started to employ it, right? I knew I was going to put X amount of my income into Bitcoin every month. Mm-hmm. And what I did when I learned about your dynamic DCA is I said, I'll break it down into weeks. And I'll break it down into weeks. And that way, what I'll do is, like, if this week is not like it's like surging up, I will reduce the amount, right? So when it's more, I reduce. When it's on the downtrend, I increase. And that's, you know what? It's been a really, I feel like I'm gaming the system. I don't know if I'm actually gaming the system or not, but it feels like I'm gaming the system, and perception can be somebody's reality.
Yeah, exactly. And then that's a good one. And then just to be clear, like, I didn't come up with the dynamic DC. I actually stole that from Ben, which was pretty good. Yeah. So, you know, it all depends where you hear it from, but I mean, it makes a lot of sense. And of course, Ben got it from somewhere else when he was taking a look at risk factors, but it was a good system. It's worked out pretty well. But the question I always had was this: is like, well, I've heard that it's just best to dump everything in, do a lump sum, as opposed to dollar cost averaging, as opposed to this exponential. So I want to show you guys something, which I think will make a lot of sense right here. And if you want to do this, this is again on the site. This part's free, the DCA simulation.
Yeah.
And what I'm going to do is I'm going to show you, I'm not going to cherry pick. I'm not going to say, okay, well, I'm going to start DCAing on November 2022 at the very bottom. I just want to just give you some data points. So let's just pick, like I picked 2023, January 1st, right? It wasn't the lowest, wasn't the top, but it is what it is. And I'm going to show you a DCA equal amount, lump sum, dynamic DCA and how that looks. So if I DCA an equal amount, let's just say Jerry's a baller. He's got $100 to spend every week on, say, Bitcoin. And actually, you know what? I'm going to add in some other stuff. This will be fun. Ethereum, XRP, BNB, Solana, Cardano, Doge. I can't put in Pi because it's like a week old. Let's just stick with that. Makes things easy. So you dollar cost average and you put $100 in every week. The day of the week is Monday. And you do it all the way to, December 2024. And if you did that for Bitcoin, you would have invested it shows right here. you would invest $10,100 over 101 weeks, which is a lot of money. But if you do it over, 2.5 years, it's not too bad. Right now, your current value would be $23,139. And if it was at the 108,000, of course, you'd be up much higher. But that's a 129% return in roughly 2.5 years. Not too bad. And who knows what, because you had just accumulated a quarter of a Bitcoin. I don't know how much that is going to be worth in, say, 10 years. But that's pretty good. And then, of course, if we take a look at some other stuff, you've been up even more so. Altcoins, 519% with Sol, 485% for XRP, Doge 284, right? Pretty good. Actually, that's not right. At this point, on March 3rd, you'd be up 300%, 260. Okay. So altcoins, you can do pretty well, but right now, pretty risky. Now let's take a look at Lump Sum It. And what I want to do is see how it says total invested 10,100. Let's just say Jerry wins the lottery in Costa Rica, and he's just got $10,000 sitting there. He's like, you know what? I'm going to take 10. Actually, let's go to lump sum. I'm going to put in 10,000.
Yeah.
On January 1st, 2023. New Year's is here. So if you would have done that, put 10,000 in, you'd be up 408%. Not bad. That's if you get that laying around. And some people will always tell you, no, it's just best to lump sum, just lump sum now. But me, I'm not a big believer in that, because what if you lump summed, I don't know, in December of 2024 at 108,000 or January 20th, 2025, and you lump sum then? I mean, you'd be down, but maybe in the long run, you'd do pretty well. But can you handle that kind of volatility being down, 25%? And a big, huge chunk of the money that you have? I mean, Michael Saylor can do it, but I don't know about you, but I can't borrow against my billion-dollar company and the stock that I own to do that, because I don't have that. So I'm just saying. So anyhow, if we did that with Bitcoin, you'd be up this. If you did that with of course, altcoins,
wow,
this is the reality. I mean, I don't want to make the case for, okay, just put everything into altcoins, because there are only like 100,000 different alts out there. So choose wisely. Solana, you'd be up 1,246%. You would have put in 10,000, have 134,000. XRP, well, you can read. That's a big, huge bump. Jerry, what's your thoughts on this, actually? Because when we're taking a look at this, people are like, man, I should just not invest into Bitcoin because I'll just do alts and make all this money.
All right. I don't think you need to do anything other than go back in the Wayback Machine and go back 5 years and see how many of those coins were there, right? Mm-hmm. Alts obviously have a larger potential for percentage growth because they're much higher risk. They're much higher risk. One of the beautiful things, and this is why I don't understand why people aren't so optimistic. They should be so bullish right now. As volatility compresses in Bitcoin, what it's telling us is the adoption is there. The security that the asset will be here in 10 years is solidifying. And as an investor, isn't that what you want? Now, as a trader, I think all of the major trading for gains is going to happen in alts.
Yeah. Oh, if you're a trader, for sure. Although
I'm not a trader and never have been. I know there are traders that follow your show, and rightfully so. You have you spend time on your show talking about emerging projects all the time, and that's a good thing. But I just don't have the risk appetite to trade anymore. I just don't have it. I'm too scared, Rob.
You know what's funny? You'll start getting that appetite back as soon as there's monster gains having. Like, hey, look at this new blah blah blah. It's gonna be the next greatest thing of all time. That's what it is. Okay, so points taken, Jerry. What's gonna be here in the long run? That's the big thing. Hey, you know what? Before I show you what it looks like for this dynamic DCA, talking about what's gonna be here in the long run, Jerry, we were talking beforehand about Michael Saylor, because we were saying, like, there's never been better times. And I was saying, yeah, well, Saylor's been right so far too, as he talks about the actual output of where we're actually are in the cycle. But then you brought up a good point. He said, not only has he not been wrong on this one, but he wasn't wrong when he put out that book. The digital wave. Yeah. So check this out. This out. Yeah, I want to show this because you told me about this.
The mobile wave.
On Amazon. Yeah, you can find this on Amazon. It was published in 2012 by Michael Saylor. I know the year this book actually came out, but you tell us what you were telling me about
what
the
was
book
interesting about the mobile wave is that Michael Saylor, hypothesized that what we were experiencing with cables in our homes and in our offices was going to leap into wireless. And what he did is he made relatively strategic investments in companies like Apple, Amazon, Facebook. And that is how he became a billionaire. And this was well before Bitcoin ever came along. And so one of the things that I think is important for us to realize is if you see something that you know in your heart to be correct,
and
you see it before 90% of the world does, that's your competitive advantage. And here we are, everybody tuning into your show, watching us talk about the gyrations of the market on a daily basis. Let's not lose sight that we're still part of the first 5% of the population into this market. Let's not lose sight of that. And if you, depending upon your risk appetite, make your investments and just be happy that in 10 years from now that you did, because you'll be rewarded. Now, will every one of the 100,000 alts that are available still be here in 10 years? I don't think so.
I don't
and that's why I think you need to play with those very carefully. But Bitcoin, I think Bitcoin has solidified itself, and it will be here in 10 years, and it will be at a much higher valuation than it is today, because more people and more countries and more corporations will be holding it and using it.
Yeah, just like Brazil. And then who knows what else is El Salvador, Brazil, United States, looking pretty good. But when I was taking a look at this book, and again, you can find this on Amazon, The Mobile Wave. He's talked about, this is in 2012. He says a Harvard education will be available to anyone with the touch of a screen, which now we have all those different types of, and I think even, if I'm not mistaken, I think Harvard did put a lot of their lectures online that you can actually attend.
Yes.
Cash will become virtual software, and crime. I don't know about the crime proof part. I mean, crime proof, we are, obviously we are a relic of that, because if you have to change people's behavior to not get phished, to not have phish attacks. But cash will become virtual software. And that's the truth. I was just transferring not a bunch, but a good amount of money yesterday on stable coins. It was the best. It was awesome. I was using Base and Solana as the layer. And man, it just moved like nobody. It just was fast and easy. I didn't have to talk to anybody. I have to beg my bank to move anything. It was great. And that's why I think stablecoins are going to do well. Buying an item will be as easy as pointing our mobile device to scan and pay. I think that already happened. This is interesting. Land and capital become more of a liability than an asset. I think if you take a look at what's happening in, say, like Florida, and you say like North Carolina, and of course, if you take a look at, just what happened in California with the fires, that's a big, huge liability, because those people, they didn't have either. You're getting priced out because of the HOA, you're getting priced out because of the people that are moving there, or you're getting priced out because you didn't have insurance. And everything just went up in smoke. Imagine you have $1 million, because in California, it ain't cheap. You have $1 million house, right? And you still owe 90%, 80% of that, and it goes up in flames, and you still owe that, and now you need a place to live. That would be the big thing where I can totally see that. But that's just hearsay. And then talks about a couple of different things. So check out that book if you guys want to, The Mobile Wave. Pretty interesting. I like that part. So let's see. And then we'll get to this last part and go to Q&A. Sorry, Jerry. We'll do this here. So this was the simulation. So we took a look at DCA equal amounts. Wow, $1 million. That's crazy. Hold on. Let's just put 100 bucks in a week, starting in 2023. You'd have again, 10,100 in, 129% up. If you would have lump summed, you'd have way more. But remember, that's a big timing issue. Or you can kind of go between the two, which is dynamic DCA in. And what I want to show you is that accumulate up to the risk level. You can do whatever you want to here. You can say, I only want to accumulate up to 0.3 to 0.39. I don't know if it's ever going to hit that. I mean, sure, it will at some point. But I picked the 0.4 to 0.49 because that's what we're at today. So you are accumulating exponentially. As it goes to 0.49, you put in 100 bucks. And then when it goes to 0.39 or down to 0.39, 0.3 to 0.39, you're gonna double that. So 200 bucks. If it goes to 0.2, 200 bucks, and or excuse me, 300 bucks, and so on and so forth. If you would have done that and just over time checked the website, or actually what I do is I just have the alerts just come to my phone from this website. You'd have put in only $4,900, again, less risk, and you have 17,000, and you'd be up 253%. Yes, you wouldn't have as much, but your risk level goes up. I mean, your risk level goes down.
That's the risk, exactly.
Right. Jay, what's your thoughts?
No, I tools, right? Using tools. I can tell you, I grew up in the United States. I spent my academic career from 1970 through 1992.
Yeah.
And not one single class taught me about wealth creation.
Yeah.
Not one single class taught me about financial literacy.
Yeah.
One of the things that all of us would, if we want to have more tomorrow than we have today, if we want to live in a world of abundance, we need to understand that assets are the only way to rise above economically, financially. Asset acquisition is the only way to rise above, because the monetary policy of every country on the planet diminishes the value of its currency.
Yeah.
So you have, if you aren't acquiring assets and holding them, you're losing ground. And so that tool that you just showed us is a tool to implement for the purpose of asset acquisition. I'm all for it. Good job. Thank you, Ben.
Thank you. Thanks, man. Hey, I just want to show everybody this. Make sure this actually came out. So people are saying, check the charts, because Bitcoin is crashing.
Ooh, remember last week when it exploded while we were talking? And now it's crashing while we're talking. So are we getting a buy signal right now, Rob?
Not only that, I'm very happy because let's take a look. Because I put in, and I've been breaking my rules lately, which is don't leave things on exchanges. I actually moved some money over because first of all, it's faster to do for me, and then because I want to buy. But I put in a limit order yesterday and then last night, and I put one in for like 81,000. It's like 81,345, and I'm like, this will never get filled. But of course, it did.
We're on the verge.
Well, no, look, 83,000. But then take a look at this. It just dumped to 78,940. So
how come? I have never once got the bottom in my whole career.
Hold on, that's not right. Hold on, I'm looking at 3 months. Excuse me, 24 hours. Oh, it didn't fill. Damn it. Okay, it went to 83,000. Well, let's hope it goes farther down. I was excited for a second. Oh well, but yeah, it's taken a.
It could. Hey, it could while you're at the beach exercising.
I already did that.
Well, I mean tomorrow morning or something.
Yeah, tomorrow morning. Yeah. Well, I mean, I go twice a day, so yeah, maybe tomorrow. And I think the leads to our last point. We'll do a little Q&A. Is what does all this stuff do for you? Right? We talk about this many a time. If you don't have the freedom to do what you want to do when you want to do it, not answer anybody, then it's not really freedom. You're just exchanging one, slavery for another slavery. So don't get too caught up in the price game. As long as you have the freedom to do the things you want to do and take care of your family, that's the big win, in my personal opinion. That's it. That's it for today.
Absolutely. I would, one of the things that I'll tell you, there's another kind of freedom too, and it's the freedom to pursue a path. And I am so grateful that I'm with this company called HyperCycle. And
HyperCycle.
Dude, it has been, I am just the process of being involved in this company. I am learning so much, right? And we hearkened back on this show to Michael Saylor's book, The Mobile Wave, right? And we can all, like you and me, remember vividly what it was like in the late 80s and the 90s as the internet was coming to be, right?
Yeah.
We got to watch and actually participate in that mobile wave where our devices started to become wireless.
Yes.
Right. We were consumers and participants in that evolution. And here we are again at the precipice of yet another incredible wave of innovation. And it's the Internet of Things, it's robotics, it's artificial intelligence, it's a sharing economy for all kinds of things, not just your home with Airbnb or your car with Uber, but very soon the ability to provide compute from my home to a world that wants it and generate a revenue, an income stream from it.
Well, okay,
These are powerful forces at play. And I would encourage everybody to think about how you can monetize the resources that you already have that are unmonetized. So do you have favorable electricity rates? Ooh, if you do, you may want to become a compute provider to somebody, right? Buy a machine and provide compute. In other words, don't let this next wave pass you by because you are caught up in the price of your favorite asset today.
Yeah. Well, yeah, exactly.
Get involved, start learning about some things. I'm choosing this path of AI primarily because I believe it's going to be the most impactful over the next 10, 15, 20 years.
Hey, Jerry, do me a favor. Tell people what compute is. Because like when I hear it, I'm like, eh.
Well, there are a lot of terms that aren't Webster's dictionary-ish yet. Node, compute, etc.
Mm-hmm.
When I say compute, I'm talking about electricity running through hardware, powering software, creating value.
Okay. Okay.
That's compute. To me, that's compute. And there are three very distinct tracks there, right? Electricity, the hardware itself, and the software. And there are people that are involved in those industries. Those are going to be huge growth industries. Huge growth industries. And if you remember correctly, the growth is by orders of magnitude. The existing industries will only innovate by percentage points. So if I'm involved in investing in airlines right now, their efficiency and their gains might only be 3, 4, 5, 10% a year.
Yeah.
Whereas if I'm in NVIDIA or AMD or Taiwan Semiconductor, I might see gains in that very same stock portfolio of 100, 200, 1,000% over the next 10 years.
I'll take it. Who knows? Then it all becomes like, what is it going to be? What's the next social media? Is it going to be? Did you just invest into Friendster or did you invest into Facebook? Did you get
exactly? Yeah. And that's where that whole little like you've got your main pillar, right? Like for you, I love what you've done. Real estate is a big, huge part of your portfolio.
Yeah.
And rightfully so. It's a tried and true, proven asset.
Yeah, and you know what's great about, and before answer this question, we know what's great about property is that you actually are creating jobs if you think about it. So like with the properties that I buy, I'm gonna fix up. So I need, and like dilapidated places, I need an electrician, I need a plumber, I need a general handyman. I need a person to actually run the operation, and I also need cleaning services and everything in between. So like every time I get one of these that isn't doing so hot, I can build them up, generate some kind of jobs. And then to answer this NITH TV, what's number 3 for? Because I said, I think in the title it was, you know, you have 3 options. Yeah, you can do nothing, which actually works out pretty well sometimes. Just sit on your hands. You can sell because you're like, you know what, this isn't a good time for me, and like Jerry talked about, tax loss harvesting, or I need a new liver, whatever. And then the last one is buy. And for me, as I take a look at the risk levels and what's going on, and like Jerry talked about in the beginning, we're in a very favorable environment. I just feel like, to me, I think I have money in the bank a little bit. I mean, I've been buying since throughout the bear market, but I did take some profits. And now I think it's good for me to dollar cost average, dynamically DCA, and buy into Bitcoin. I'm not buying into any alts right now because I think they've got a ways to go, honestly. But we'll see. We'll see.
I've taken a couple stabs at some, like, for instance, about a year and a half ago, when I got involved in HyperCycle, Akash, Aether, BitTensor,
yeah,
AI. These are all plays that I put some money into, and I really liked all of them because they had proof of stake protocol validation elements to them where I could earn a yield. In other words, I could compound my asset and get more assets by doing nothing, by just basically delegating those assets to a validator. To me, that's like dollar cost averaging.
Yeah, that's the way.
But will all of those little AI crypto plays be here in 5 years? I don't know. I have no idea.
I don't think so.
At least 1 or 2 of them will be.
I know, but you know, that's just it. Like if you think about it, like MySpace, Friendster, I mean, they didn't make it, but they were around for a while, and they did okay. So think of that like with these different digital asset projects. Like I know people say, well, this one's gonna make, this one's gonna make it. You know how hard it is to actually make it and actually have that 10-year track record? It's in this situation, especially in tech, it's almost impossible. So like that's why I'm always talking about taking profits. I think most of this is not because it's trash. It's just because something happens along the way. You're not perfect. It doesn't break the right way. Your luck runs out. Somebody else screws you over, or something happened where you didn't put the right allocation of resources, whatever it is, and then it just doesn't make it. So I'm thinking to myself, okay, which ones are going to make it? Which ones? And some just suck. There was one here. Lovebug says, Rob, when will you be taking profits? Well, along the way, I've taken profits like we've talked about. And the most recent I had to, because Jerry, you've been doing the same thing I have, right? You've been buying through the bear market. So you've been accumulating. So I actually, a couple of weeks ago, I had to take some profits because a family member needs living space. They need a house. Yeah. So instead of me just sitting on, you know, this crypto gains, I said, sure, man, I got you. Don't worry about it. And took some profits so I can give that ability for someone to actually have a house finally. So that was me. But throughout this little mini bull, we've taken a little bit of profits here and there for days like this as it goes down. But the big sell, of course, is that video where I talk about selling 50 to 80%. That's the big stuff. Let's see. There was one. Somebody said, and I saw it, and they said, you're going to feel the pain when Bitcoin goes to 35K. Jerry, let's say we start going down, right? Something comes out that just shakes everybody to the core. Tariffs are at 100% or something. I don't know. Jerome Powell comes out and says, hey, no cuts until 2028 or something insane. And now we see M2 money supply is, you know, through the ground, and it starts to go from 78 to 60 to 50K to 35K. Let's say it happens like the next month or so. What do you think? Do you think people will say, I'm going to here for the tech, and they're going to stick around? Or do you think it's just going to be like even more massive?
I think you will see hysteria, but
Yeah.
not in a positive way. I think you will see fear manifest itself in ways that we thought may never be done again. I think you will see terror, and depression, and you'll see numbers drop. You'll see social media engagement bottom out. You'll see views on content creators content just plummet. You will see alcoholism on the rise. It will not be pretty.
Alcohol's on the rise because people are celebrating because they got cheap Bitcoin.
No, because they're trying to drown their sorrows.
Yeah, probably so. And this is like my only regret at that point to do 35K is that I told my ignoramus brothers that they should be buying Bitcoin. Then I got to hear from them for the next, 10 months to a year. How's that Bitcoin doing, Satoshi? Oh, you sons of...
The thing about Bitcoin going down to 35,000, Rob, that's one thing. And I believe Bitcoin would rebound. How many projects would be decimated that will never come back? I think you will see a shakeout. You will see us go from 100,000 alts to 1,000.
Yeah, well, thank God.
It will devastate the peripheral in ways that we haven't realized yet. If
that happened and things were going to that level, if Bitcoin 35,000, this is just hearsay. If you just came in, we're not talking that's going to happen, but let's say it does. It goes to 35,000. You know what the altcoin market would do?
Oh, it just gone.
Yeah. At that point, like I would look at that and say, now you really got two options at this point. You could either, if you get out, fine. But I think for me, it's either do nothing, which is what I think a lot of people would be smart to do. But for me, I would look at that and go, okay, it's at 35,000. Has it ever not gone above its all-time high during a 4-year cycle? And was there, and I guess I'd have to take a look at the circumstances. If it was something like somebody hacked Bitcoin or there was like a double spend and screwed everything up, like, okay, well, yeah. But if it was just like because of external factors, which is probably what 99% of what it is. And then of course there's the leverage plays, there's the people getting liquidated, there's the thin order books, there's the people panicking, and then it just goes down. I'd be like, this is actually pretty good. I'd like that. All right. Hold on. There was somebody, hold on. It was from Chi-Town. Where did she go? 35K LOL. Hey, we laugh now. Oh, Jerry, answer this one. She said, 312 girl says, I heard a talk show person completely not believing Bitcoin is a thing. I'm perplexed by this. What do you think about? And I think this might be Rachel Maddow and her recent rant.
That could be. Here's the thing, Rob. I don't know if you remember, but I can distinctly remember this had to be September of 2017. I was so active in my investment journey. I was making incredible moves with the medical cannabis stocks that I was trading and making money in. And the Bitcoin came across my eyes. A friend was talking about it. I did some research on it. And I was adamant that because you couldn't touch it, it wasn't investable.
Yeah.
And I was convinced of that until enough education and enough exposure that I became a believer. And I think that it's a completely natural place to be a skeptic and to be a non-believer. And if you look at it really objectively, isn't our entire educational system and culture set up to just produce employees and not entrepreneurs and not thinkers, and it makes sense. So that thing that you just put up on the screen about being perplexed, I think it's a completely natural state for somebody to go, hey, I don't get this. This doesn't make any sense to me. And it isn't until you get educated around what is money, what is monetary policy, you know what I mean? That the veil comes off and you go, oh, I can see this clearly now. Now this makes all the sense in the world to me.
Yeah, I can see clearly now. The rain is gone. So yeah, it's true. All these things that we just talked about. I think the bigger thing is, of course, what you said was pretty good. If you can't touch it, it's not tangible, so there's no value in that. But I mean, there's a reason why, you know, Facebook is it almost $1 trillion company now? I'm not for sure.
We know Apple is.
Yeah, we know Apple. But I mean, Apple makes, you know, real tangible. But I'm just saying, like, let's just say $500 billion plus Facebook is. And then, of course, whatever Elon bought Twitter for, I mean, you can't really touch, per se, Twitter itself. It's data. And it's backed up by, what is it backed up by? People use it. People buy ad space. So, yeah. But I think that the bigger thing is when people, and I always say this, if you come across people like Bitcoin's a scam and it doesn't make any sense to me, why would we use this? I always tell people, just ask whoever told you that one question. Where does inflation come from? And if they can't answer it, then you say, well, I can't explain Bitcoin because you don't know what you're talking about. And
or I could explain Bitcoin to you, but you wouldn't know what I'm talking about.
You know what I'm talking about. Yeah, exactly. So if they can get that concept without telling you, oh, it's just those greedy corporations. That's what Elizabeth Warren told me. Then, you know, if you can get out of that and educate them, sure. But if they don't get that part, they won't get Bitcoin. That's for, but yeah. All right, what else we got? You're welcome. Bitcoin taught us tangible isn't everything. That's true. Is the bear market starting? Well, you know, bear market definition. There is an actual, we could be.
Investopedia has a definition for these things.
Yes. Where did I
both
put it?
bear and bull.
Here we go. Aha. This is one I always use. So this is what we could define it as. Yeah. Bear market is a financial market experience, prolonged price declines. Check. Generally of 20% or more. Check. Bear market usually occurs along with widespread investor pessimism. Jerry, what's the fear and greed index today?
You know, I don't know what the fear and I can go look for you if you like.
Please do.
Okay.
Because I'm pretty sure we're at the fear or extreme fear. Large-scale liquidations of securities and other assets. Check. Let's pull that up right now. 5-bit liquidations.
$23.37, the old fear and greed index, investment sentiment.
Liquidation.
And it's been like, so here's the 1 day, 5 day, 1 month, 6 month. Take a quick 6 month chart. Oh, we've had some periods of optimism here in the 6 months, about the last 30 days.
Yeah, but this is the liquidations chart.
That's a different world.
And it looks like, and I want you to notice something. Which ones get liquidated the most? Going all the way back to September. And if you just eyeball it, longs get liquidated the most, it seems, and to a greater extent too. I mean, there's some times like here where you got a total of 183 million shorts got liquidated in 24-hour time frame and 90 million longs. But just going across the board, longs get liquidated a lot more than shorts do because people become over optimistic. Nothing wrong with that unless you're doing longs and shorts. And then lastly, and a weakening economy. I believe GDP just fell, or they're predicting a fall in GDP. So if you're going by the definition, and tell me where I'm wrong here, everybody. Financial market experience prolonged price declines. You can say whatever that is. Generally 20% or more. That's a lot. I think we've actually been at that point. Usually occurs with widespread investor pessimism. Jerry just pulled up the fear and greed index. Large-scale liquidation. We hear about this every day. And a weakening economy. we just got our print of the unemployment rate. It just upticked 0.1%. Non-farm payrolls didn't hit are way under than what they were because everybody doesn't want to hire people because they're worried about tariffs. So if I had to say, is this a bear market or a bull market? Not looking too bullish. I would say, yes, it is a bear by this definition. Where am I wrong? Stop the FUD. Watts, you got to call like you see it. You got to call like you see it. Okay, Watts, you tell me where I'm wrong here. Are we in a massive bull run? I'm just missing it. Weren't you super bullish the other day? I've been bullish the whole time, long term. And I tell you this every single day. Like, I still feel like we're going to go places. Just in the short term, it's not going to do too great. I mean, I can't put my head in the sand and not look around and go, oh, look at the information we just got. Yeah. Well, I mean, we look at charts, we look at these things, and we look at pullbacks. It's just, it is what it is.
Yeah.
Yeah, right. Oh, Jet says, okay, is it a bear market? We want to know if it is the bear market of the 4-year halving cycle. No. Unless we keep going down for the next, what is it, March? 9 months? And we go into 2026? All right. But yeah, that's where we're at. Smart money tracking. There's Wes. We had a great bull run. We had a great bull, man. 16K to 110K. People got greedy as usual. Yeah. And shout out to Wes for, I think he sold in December. I think Wes, correct me if I'm wrong. In March of 2024, you sold like 30%. And then in December, you sold like the other 50%. And you got like 20% left. And then True Roots says Bitcoin will consolidate for several months. I can see that. Yeah, NVIDIA went up like 1,000%. People still weren't happy. Okay. Sold 30% March 24, and then 50%. Yeah. Crazy, Jerry. Crazy times.
Good times.
Good times.
Yeah.
Well, anyhow. So to make things clear, everybody, is definitely bearish sentiment. You can see it. Even the best news of all best news doesn't really move the markets too much. And because of that, there is a massive amount of bearish sentiment. We took a look at liquidations. We took a look at fear and greed index. We took a look at recent price action. People could say it's a pullback, but we've been going down quite some bit. Is this a bad thing? No, it's actually a good thing for people who are like ourselves. You're like, well, we can still keep accumulating and go from there. That's fine. But to say like this is like going to be the next crash of like March 2020, no, that's not what we're saying. It's just the truth. And I know people, it's hard to hear it, but it is the truth.
A lot of people, Rob, are looking at where the puck is, right? And I remember one of my very first hockey coaches, he was like, skate to where the puck is going to go. Where is the pass going to lead you to so that you can put it in the net? Yeah. Go skate to that. The same thing in soccer. You know, it's like you see the 7-year-olds, they all travel the ball like in a pack. But then as they get more skilled and more advanced, they're spread out and they're starting to act strategically. I think people need to keep in mind, put your money where this industry is going. Don't get so caught up in where we are today.
Yeah, who knows? Tomorrow's a different story. You know, maybe there's some, and it's like we talk about this too. Like we'll get some negative story about tariffs, Trump putting another 10% on China, and then going forward with 25% on Mexico and Canada. And then next week we could come out where it's like, oh, we're just going to suspend that for the next 3 months. And then all of a sudden Jerome Powell comes out and says, you know, we got to do some rate cuts. Then all of a sudden we're like, well, we're back. It's great. But so, I mean, today as we're looking at it, this is the reality.
That truly is the faucet, isn't it? The rate cut. The rate cut is the faucet for those of us who own assets to watch our asset value engorge.
Yeah, exactly. And I will just say this: if like what we just talked about, you're like, well, it gets you upset, gets your heart racing. Sorry, but that's just, you have to think to yourself, if you're in that situation, maybe you invested too much. Maybe you went a little bit got a little bit too ahead of yourself. Maybe you should have. I can't give you financial advice, but if it pains you this much to hear of what's happening, and I can't lie to you, I could lie to you. It makes my job a lot easier. And then everybody gets hopium and copium and they leave. But I have to tell you what I see. And this is it. If I'm wrong, I'm wrong. But if this gets you upset where it's like, hey, we have bearish sentiment, I think you invested too much. You needed to actually de-risk as time goes on. Anyhow, Jerry, we're going over an hour.
Oh.
Yeah. I got to get to Costco before it gets too crazy. So I got to get out of here. Get some hot dogs. All right, everybody. Thanks so much. See you on the next one. Like and subscribe. Adios.